Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin, Mota.
Well, Yatin, it's a tragedy, right? I mean, in theory, we are already there, 25,000, but we just missed it like by a fraction.
Correct.
25 basis points. So 24,999.75. That's the record level on the Nifty. But then after that, we saw a U-turn, in fact, profit booking kicking in at the higher point of, at higher levels. And, the Nifty, in fact, ending just about marginally in the positive, higher by 1 odd point, and the sensex as well, very flat, 20 points higher. The kind of, momentum that we saw in the first half completely fizzled out in the second half, of the session. But the broader end of the markets managed to hold out very smartly. The Nifty mid-cap index was up 1%. Even the small-cap index, gained somewhere around 1% or thereabouts. Advanced decline ratio was firmly in favor of gainers. So on the NSE, the advanced decline ratio was almost 3:2. Sectorally, banks were emerging as, the top performers in the first half of the day. But there as well, we saw the momentum fizzled out. And the Nifty Bank index, although ended above that 51,400, but it fizzled out quite a bit from the day's high, around 900 points or thereabouts. It came off from the day's high.
But I think PSU banks, Nandita,
yes, absolutely.
That index closed at the day's high, almost 2.5% higher.
And there were quite a few movers and shakers on the PSU banking index as well. SBI was doing well, and PNB, 7% gain coming in there after the numbers. But what didn't do well, Yatin, was the defensive pack. So FMCG came under pressure. Remember, Tata Consumer reports numbers tomorrow. Ahead of that, we saw, some bit of selling coming in the FMCG pack. IT as well, we've seen a good run in IT so far, but today came under profit taking. In terms of individual movers, Yatin, BPCL was the top gainer. There's been a brokerage upgrade that has come in on OMCs. So BPCL reacting to that. You had L&T, Divi's Lab, Bajaj Finserv, Ultratech Cement, of course, after the deal. On India Cements, we saw that stock emerging as a gainer. On the flip side, consumption names like Titan, Tata Consumer under pressure, ITC under pressure as well. Airtel, Cipla, Kotak Bank, these are some of the other performers or losers, so to say. But Yatin, broader end of the market had quite a few high flyers. Railway stocks, they were kind of seen picking up steam today.
Absolutely, and if you look at the broader end of the market, RITES, that stock clearly was flying in trade. Almost 14% higher for that one, because the board will consider a bonus issue. Bandhan Bank, strong set of numbers and good commentary, in fact, Nandita, for Bandhan Bank, because I think the kind of asset quality improvement that the management envisages in the coming quarters would probably improve the profitability for the company. 14% higher for Bandhan Bank. So this is one of the biggest gains for the stock ever since we have management changes which were proposed and approved by RBI. Mazgaon Dock, RVNL, Ircon were the other PSU gainers which were there as far as Nifty 500 is concerned. So the PSU pocket again making a comeback, Nandita. But what was not doing well in trade was Lakshmi Chemicals. We had Equitas Bank, Latent View, as well as New India Assurance. After the run-up, New India saw last week some bit of profit taking had come in there. But if you look at stocks which are at 52-week highs, we had Kane Technologies, Deepak Fertilizers, Sumitomo Chemicals after good numbers. Stock was up 6%, new 52-week high. Nuama, Suzlon, PI Industries, Sun TV, FSL, all of these stocks are doing well in trade. So, yes, the mid-cap end of the market was quite active, and obviously we missed by almost, 0.25 points that historic 25,000 level on the Nifty.
In theory, we are already there, but it's just that you have to see that magical figure on the screen to really believe that we have hit that level. But on that note, let's take a look at the stocks that are on our radar this afternoon, starting with PNB. As Yatin and I were talking about it, the PSU Bank Index was the top sectoral mover today, up 2%, and PNB 7% gain coming in there because numbers have been fairly good. In fact, even brokerages have hailed the numbers. Strong first quarter numbers. Profit has risen somewhere around 159%. I mean, it's doubled on a YOY basis. There's been a sharp fall in provisions as well. The recoveries have been healthy. In fact, the GNPA ratio also plunged, and in fact, the guidance that has come in on the GNPA front for FY25 has been lowered to 4% vis-a-vis 5%. Even credit cost, guidance has been lowered to 50 basis points from 100 basis points. In terms of the commentary, management has said that, there has been improvement in slippages over the last 10 quarters. NPAs and credit credit costs, as I mentioned, they've lowered the guidance, so it is expected to moderate even further. And the NIM guidance of 2.9% to 3%, the margin guidance, is expected to be maintained at the same level. Margins for banks have been under pressure, Yatin. So this commentary at such a time comes as a big positive. Provision coverage has been at 96%. Return on asset has been maintained at 1%. In fact, ROA of 1% can be achieved before the exit of the current financial year. That's what the management has to say. But the new draft LCR norms by the RBI could have some impact on the profitability going forward. The company is also planning to raise somewhere around 5,000 crore rupees via a QIP this fiscal itself. Talking about what the brokerages have to say, Morgan Stanley has an underweight rating. The target price, Yatin, they have raised it to 80 rupees, but it's much lower than where we are at right now in terms of the stock price. So it's somewhere around, I think, 30% lower than where we are quoting from yesterday's close price. Morgan Stanley has said that net interest income was broadly in line with estimate. It was led by, average balance sheet growth. Margins have moderated just a bit on a quarter-on-quarter basis, but that's in line with the industry standards. Asset quality trend has been better, and lower slippages, credit costs have been a plus. Of course, they have also taken note of the fact that the management has lowered the credit cost guidance. That's a big positive. But what, Morgan Stanley and the street will be watching out for will be the special mention accounts, the accounts that have the potential to turn into NPAs. That has been elevated at 2.5%, and that will be a key monitorable for PNB going forward.
Absolutely. And PNB, the stock, clearly one of the top performers in the PSU pack today. But, the top performer on Nifty was ICICI Bank. Obviously, some respite from the day's high, but still, we had a healthy set of numbers being reported by ICICI Bank over the weekend. Now, CLSA as well as Bernstein both have a, positive rating on the stock. Outperformer call by CLSA target is 1500. We also have a Bernstein, market perform target 1250. Now, if you look at ICICI Bank's numbers, obviously the deposit growth is something which has been a concern ever since the results of HDFC Bank have come in. But probably, the franchisees which have a bigger branch network, something like a ICICI Bank, could probably have an advantage in the medium to long term as far as deposits are concerned. Also, if you look at ICICI Bank, they have highest amount of standard asset provisioning, and just because the other fees head was slightly tepid during the quarter, the net interest income growth was quite strong versus the analyst expectation for ICICI Bank. In fact, Bernstein says that the loan growth and the deposit growth were healthy. In fact, loan and deposit growth are driving a 14% year-on-year EPS growth, which is quite good in an environment wherein liquidity is slightly an issue for banks, because probably the bank deposits are being competing with stock markets when it comes to the investments and allocation of funds. Probably it's a short to medium term issue, but yes, ICICI Bank, the stock on your screen, clearly doing well in trade post the numbers.
That's true, Yatin, and even on a YTD basis, if you see, most of the private sector banks have given you negative returns, barring ICICI Bank that has been, the outperformer of the lot. I think 20% kind of gains on a YTD basis, and even IndusInd Bank, I think that's one bank that has given positive returns. But on that note, let me talk about IEX. This stock was also in focus. You have mixed views coming in on from the brokerages after the numbers. Numbers were good. You saw an 18% jump in revenues for the first quarter. Profit jumped somewhere around 28% or thereabouts. EBITDA margins were also up by 200 basis points to 80.4%. Volumes increased by over 20% as well on a YOY basis. The management has pointed out a few growth levers for the medium term. Out of them, it says that increase in electricity demand and supply would be a near-term growth lever for the company. A large capacity addition in the renewable energy and storage with declining costs. That was another lever that was pointed out by the management. Favorable regulatory and policy framework, as well as diversification of the company into coal exchange, carbon exchange, and other segments. These are some of the levers for growth for the company going forward. In terms of what the brokerages really have to say, it's pretty much a mixed view, but Axis Securities is positive on the stock. They have a maintain add kind of a rating. They've maintained that you should add the stock, and target price has been raised to 195 rupees from 170 rupees earlier. They've also raised their volume estimates for FY25 and FY26 by 1 and 3% respectively. Even on the earnings per share front, FY25 and FY26 EPS have been raised by 5% and 7% respectively, after factoring in the higher other income. But Bernstein has an underperform rating. They've got a target price much lower than what Axis has pointed out, 110 rupees per share. They've maintained, or they've noted, that the company had a strong quarter run rate for July. Also seems to indicate that volume growth topped 25%. And near-term tailwinds also are supportive for volumes. But they have pointed out that the next 3 to 6 months could be a little uncertain when it comes to the regulatory environment. Nuvama as well has a reduced rating. Target price of 150 rupees. They have baked in a volume growth of 17% for FY25 to FY26 and 16% vis-a-vis 14% earlier for FY24 to FY30. But they have pointed out that they see limited upside on the stock. Interesting fact that out of 11 analysts who have coverage on the stock, 8 of them have a buy call on the stock. But I think these two brokerages are a little cautious when it comes to this particular counter.
Absolutely, and IEX, that stock has been facing some issue ever since the government planned the coupling of, power in terms of prices, aggregating all the exchange prices and doing a single clearance. Probably that doesn't augur well for exchange like IEX, which has a very large market share in the entire electricity exchange volumes. But yes, that is one, thing that CRC has been consulting stakeholders, and probably a final decision in the matter would decide the fate of the stock in the short to medium term. With that, I think it's a wrap.
It's a wrap, Yatin. Of course, IEXC 6% higher, but of course, I hope we can see that magical figure of 25,000 in tomorrow's session. Today, we just missed it by a whisker. Came within kissing distance of 25,000, but couldn't really bell the cat, so to say. But with that, of course, you've come to the end of this edition of Closing Bell from me and Yatin. Thanks a lot for tuning in. But come back and join in tomorrow morning at 9 a.m. on Opening Bell with me. For now, have a great evening and and of course, stay tuned to Moneycontrol for all your other news and updates.